well, it doesn't get bigger than this when you have Madhusudan Kela of Reliance Capital, someone who for last 2 decades has passionately worked for creating wealth for retail investors. And currently, given what is happening in the global markets, when retail investors are panicking when they should not be panicking, what should be a very basic approach for Indian investor? That is something which we'll try and address with Madhusudan Kela. Madhu, fantastic to have you back and thank you for joining us.
Thank you, Nikunj.
Dissect the magnitude of problem for us.
I think this whole correction has to be viewed in the context of what has happened not in the last 1 month, but what has happened over the last 3-4 years. Liquidity has been very easy worldwide because of injection of this quantitative easing. Interest rates have been virtually zero. So obviously the risk on trade has been on not for last 1 month, but as I said, for last couple of years. Now market, when you are coming out of this kind of a situation, it is extremely difficult to pinpoint when is it with this black swan kind of event will happen. But given the build-up which had happened in the markets, given where the valuations in general had gone, like people are crying foul about China, it was. Looking back, it was only a matter of time when the stocks are trading, the whole market is trading above 100 PE multiple, companies who do not have virtually no fundamentals, have market cap of $1 billion and $2 billion, you can reverse merge anything, create a company out of thin air. And so I think it had to happen. But when it happens, obviously it is very painful for the markets, and the noises are far bigger than what actually sometime the reality is. So I feel all this crying wolf about China is just being made an excuse because of the easy liquidity, because of the build-up of this bull market. Market had to correct. That's what I would say, and that correction is what
but is. But Madhu, you saw this one coming. When we interacted, I think in early June at the ASK conference, you said that look, China was set up for a fall.
Yeah.
It was more like a bubble, and you give me example of that Chinese solar company which lost billions of dollars of market cap. Sure. So you saw this problem was coming.
No, see, I had this gut. Ultimately you never know that what is it. It is going to trigger, whether it is going to trigger after 15 days, 30 days. But being in markets for 20 years, one thing we know, Nikunj, that these things can get prolonged, but they cannot vanish. In a sense, ultimately reality has to catch up. So I would say that, what has happened in the last 1 month or so. Let's not even take 3 days. Right? For instance, FI has been selling India for last 4 months.
Yes.
There's been roughly 25,000 crore rupees of inflow from foreign institutional investors in last 4 months or so. So it is not a last 3-day problem. It was a problem which was building up, but because in bull market this is what happens at the fag end. Yes. Everyone wants to participate. So maybe I'm not saying that this is the end of the bull market, but around that 8,500, 9,000 Nifty level, people gave up everything and say that just we have to buy now. And it was somewhat even visible even in the Indian market that so many small companies, mid cap, इतना आसान थोड़ी होता है वो every day morning में आओ कुछ भी ले लो और पैसा बन जाएगा इतना आसान.
There was a buying panic.
Yeah, absolutely. There was a buying panic. So I think this correction, as I see, is an extremely good thing for a long-term investor. क्योंकि तेजी के मार्केट में then it becomes even difficult to make money. That at that valuation when you buy, your margin of safety is very low. And given now the correction which has happened in individual companies, even in the markets, I would say that a retail investor is again getting a chance.
So this is a deep bull market correction. This is not end of the bull market.
No, doesn't look like to me. Absolutely. However, we must recognize that whenever markets correct like this, to expect that V-shaped recovery and everything will be hanky-dory again from next week onward, that again is taking it to the next extreme. So I would say that we must acknowledge that still even at 7,800 Nifty, we are still up 50%, 60% in last 2 years. Individual companies, there has been massive amount of wealth creation in the last 2 years. So if the market even consolidates here for a couple of months, I would not be very surprised that, and eventually as the earning catches up, the gains will come.
So let's say a year from now, 6 quarters from now, markets would be significantly higher from where they are today?
Nikunj, I don't know about the index, but I know about individual companies, they will be significantly higher. Because this is where, at least in India, that much I can see that people are getting misguided and by seeing the broad indices that it has gained 200 points, it lost 200 points. If you look at the whole composition of Nifty, there is no reason for, let's say, for instance, metal companies to do well in the last 12, 18 months. And they have some weight on the indices. The public sector banks obviously had pressure. They have some weight on the indices. So what I'm trying to say is that when you look at the broad indices, you get a misguided picture. But you go deeper. If you know your companies well, and if these are companies which I called it typically have been bear market survivors for last 4-5 years, who have survived the storm of last 4-5 years, have stuck to their business model, their balance sheet are not fractured beyond repair, and they are managements and companies which are focused on execution. You see the amount of wealth which has got created even in the last 2 years is not funny.
So let's break the world into 2 or 3 large parts. One, it's currently a death knell for commodity producers. Brazil, Russia.
Yeah.
How will the world change now that the wealth effect will move from commodity producers to commodity consumers like India? Because that's the big change which is happening in the world.
It's a big boon for India because we are obviously, apart from oil also, we are one of the largest commodity consumers. And we have to build our infrastructure. We have a massive capex cycle. So, if railways have to spend 8,50,000 crore rupees, you just imagine the amount of steel which is going to be consumed. And steel prices are back to where they were in 2001 and 2. So, it is by and large very beneficial for India. However, let me say, one thing which worries me, that if the commodity and the oil prices stays here only, or if it goes down further, then some kind of a blow-off of a country is not ruled out.
Geopolitical crisis.
Country as a whole. What can happen to Venezuela, what can happen to Russia, what can happen to Brazil. We don't even know. So I think I would pray as an investor that commodities and especially oil should not fall, because it is very general perception that if oil falls, it is very good for India. Yes, it is good at a point of time, but if it creates global turmoil, then it is not very good for stock markets. So I would hope, somewhere here, oil must find support. And typically, let's say, if oil prices rise by $5-10, we should not complain, because that will provide some kind of a resemblance to the world. However, it is a fantastic news for country as a whole that this collapse in commodity prices has actually come at an opportune time where we are just about to embark on our growth plan, for a growth path for the next 3-5 years.
So do you think, irrespective of what is happening in the world right now, China is contracting, US is expanding, entire EU is in a mess, India is on a cusp of both structural and a cyclical recovery?
Yes. The answer is an affirmative yes. However, as I told you last time, we must not fool ourselves. Whenever there is a turmoil of this nature which happens in the world, that we will be completely unaffected. We will 100% be coupled in the short run. In the long run, we have everything to decouple and have our own chart path, but that is medium to long term. But when this kind of a turmoil happens, especially in emerging markets in the world, obviously India will be a part of it. And based on my experience of last 20 years, whenever a turmoil of this nature has happened, this has been a great boon for investors who have medium and long-term perspective.
Never waste a crisis. That's what you've always
said. Absolutely. So I am saying here that, again, am I suggesting that if you have not invested in equity, tomorrow morning go and put everything what you have? No. I am saying use this crisis, be systematic about your investment. And we know that for sure, Indian investors, by and large, are hugely underinvested in equities, even after the inflow of last 12-18 months. So from their perspective, the India long-term bull case is still pretty much intact. I do not think it changes with this 3-5 day correction or some commodity prices going up or down. It doesn't change at all. I think that, and it is only getting accelerated. In my view, the work of this government which has been done in the last 12-18 months will start to be seen in earnings from next year onward. So it is only getting strong. And if this kind of a turmoil is there, just imagine, ultimately, which are the other countries which are offering 7-8% growth? So money will have to come here, whether it is of a retail investor or of a foreign investor. So if you are a trader, if you are a speculator, I'm incompetent to give any advice. I don't know the trade. But if you are an investor and if you have, let's say, 2-3 year perspective, then systematically investing for a retail investor in this kind of market is what is highly recommended.
I'm going to take the clock back, and 2008, on a different forum, we had a similar conversation, and you said, look, I'm a table thumping bull. Sina thok ke maal lene ka.
Yeah.
Are we there?
I don't know. To be honest with you, are we deep enough in that? See, it's a very dynamic situation in the world. In fact, it was very, very unnerving to see that after such a massive step which Chinese central bank took, Dow erased all its gain.
That's deleveraging, isn't it?
It's deleveraging. But we don't know how much leverage is there.
Yes,
so we can't pinpoint that, this is the end of deleveraging. So what I'm saying is, I'm a bull. If you take a medium-term perspective, I still believe that markets will offer the most superior returns as compared with most asset classes in India. India's story is intact, but am I something saying that today itself you just put all your money in equity? Not yet.
So when will you on the table and sip out all your money? What will it be a price-based correction? Will it be something in the global environment which needs to change when you will say, look, the risk-reward ratio is on my side. Right now you're saying it's time to buy, but stagger your investment.
Yes. But see, Nikunj, this is global. I'm telling you now, I don't have a clue as to when these, what shape, let's say, how deep is China's trouble? We don't know, because it is not linked to what has happened in 3-5 days. There is a clear-cut slowdown. There is a clear-cut demand problem in China. Let us acknowledge, and the capacities which have got created over the last 10 years are far more than what actually they require and what the world can today consume. So the problem is deeper. Now, how it settles, and I am hoping that 2 days later there is a Jackson Hole, which is essentially been a turning point for world markets, and it has been historically 2 events have happened. So I'm just hoping that all central banks, all world economies will come around and say that there is a need for a concerted action. In this turmoil, there is one positive which has happened. I don't see any chance of rate hike from US, at least not in September. I'd be surprised now if in this kind of turmoil environment, even if it happens in December.
Now, typically every time when world gets reset, the market behavior changes. So after 2008, money gravitated towards quality stocks, and asset owners, they started correcting. Do you see that more and more outperformance will restrict to some of the quality stocks, good balance sheet companies, and the market action will get narrower and narrower now?
That has been the case for last couple of years, Nikunj, and that is again. But in this, there's one sector which continues to look good, is the pharma sector. I would say, they don't have
the first one in 2008, I think, we identified the potential of this sector.
Exactly. There is no real crisis around for the sector as a whole, because just because there is a correction of 20% medicine demand is not going to go down in the world. The whole generic trade is working in favor of Indian companies. The cash flows are very, very strong. They are getting into a very dominant position. The domestic demand is picking up. And I think there's one interesting theory which I have, that whenever a sector actually starts to expand, usually I have seen it only ends in a bubble situation. Okay. So what happened in IT in 2000? It actually ended up in a bubble situation. In 2007-8, what happened in infrastructure and real estate companies? So I think, pharma sector eventually will end at a very high valuation. And even today, you can buy the best of the companies at maybe 20-22 times forward earning. So that still remains
one of your favorite sectors.
One of my favorite sectors.
But just to challenge your bullishness there, let me just point out the comments we got from Sun Pharma. US FDA market is getting competitive, and there is a serious price erosion in the US generic market. If India's best managed pharma company is of the view that world's biggest generic market is struggling, Isn't that risk to a business cycle?
But they never said that there are no opportunities.
Of course.
They said that, of course, what you are making, but they are still filing ANDAs after ANDAs after ANDAs. They are getting approvals, and all companies, by and large, are getting their presence even more stronger in the US market. Obviously, in any trade where you have 5-7 players entering from India and 5-7 players globally, the margins will get impacted, but the size of opportunity still remains very large.
There is a consensus view around private banks. You've never liked consensus in the past, but this time is the time to give the consensus, because PSU banks are in a deep hole, so to speak. If economy comes back, private banks will get lion's share of the market share. Would you buy this consensus view?
Some of them.
Not all of them.
Not all of them.
So you're not bullish on every private bank?
No, I'm not bullish on every private bank. Some of them, again, you have seen a lot of correction in some good private banks. Again, when the consensus is, jab sabko pata hai that XYZ is right, the market really obliges you to be...
That's why I asked you this question.
That's what I'm saying. I would not rule out if there is a great opportunity in 1 or 2 public sector banks from a 3-year investment perspective. Everyone seems to have written off that case. Because let's not forget that they are still generating 1,20,000, 1,30,000 crore rupees of operating profit, private public sector banks put together. And the market cap of all public sector banks put together is less than 4 lakh crores. Market cap of all public sector banks is lesser than the market cap of the State Bank of India.
Yes.
And there is a balance sheet of 50 lakh crore rupees.
They have size, they have reach.
So I would not rule out that, if there are 1 or 2 or 3 winners. Again, can you buy public sector banks just as a basket? No. But I'm watching it very carefully. Maybe there is some winner there.
Without getting into a name here, just for the benefit of our viewers, I want to point out that Madhu's been bullish on HFC companies. We won't get into names here, but you like that HFC space still?
Yes. I think that is a very structural story for India, And in this kind of environment, the rate cut benefit has already arrived there, Nikunj.
Yes.
They are not waiting. They are capitalizing from the bond market. Cost of debt has come down. Size of the opportunity is very large. And what is happening in general credit environment, because the banks have been cautious, slow in acting, that benefit is going to well-capitalized NBFC companies. And you are seeing both in profits as well as in performance.
So this is one group which I guess also earning visibility strong of at least 15 to 18% for next 8-10 years.
Even not 10 years, at least for the next 3-4 years, that 18-20% earning visibility is there.
And this kind of panic is when you want to buy some of these good companies. I mean, this panic is the opportunity to buy good companies.
Exactly. Unfortunately, they are not correcting enough.
Because they are good businesses.
Exactly.
Okay. Now I'm going to take the clock forward.
Yeah.
And let's talk about 2017. Hypothetically, by that time, government action would have kicked in.
Sure.
GST would have got implemented. The infrastructure sector, whether it's railways or defense, would have kicked in. So what kind of a market scenario do you think we could be staring at? I'm not looking at index. I'm not talking about a Nifty level. But in generally, a lot of good things will happen in next 24 months.
Yes, I think...
How will the world change? How will India change?
India, I am sure, will be positive. As I said, on individual companies, individual stock ideas, and individual managements. I put a lot of focus, as you know my style of investing, on management. So the people who are focused, I think there will be a disproportionate wealth creation, which is still yet to happen.
You've always taken disproportionate bets in the past. You've said if you liked a business, you've liked a company, you've liked a promoter, you said, doesn't matter what the world says, I've done my homework, I'm ready to take that disproportionate bet.
I think that is the way.
Are you still taking disproportionate bets?
Yes, I am.
So you are finding gems in this kind of market.
I am, yes.
And that's the message I want to send it to you.
No, I am saying yes. Can I, if you interviewed me in June, I was quite nervous.
Yeah.
Because I was not finding those gems.
Okay.
I was not finding the risk reward. Am I starting to see that risk reward happen? Yes.
So we may not be nearing the end of the pain because technically...
But, and again, even what I'm suggesting to your viewers is what I'm implementing. So if I like a particular company, if I like a particular business, I'm also not saying that this is the day just because the stock has corrected 30%, I should just go buy lock, stock, barrel. No. I'm saying yes, I've done my homework. Markets are very volatile and it can give me 10, 20%, 15% correction even in good quality companies.
Of course.
So we are systematically buying them.
What is on your avoid list?
Avoid list, there's one fear which I have is high P multiple companies. because I feel I can clearly see the world has ticked a clock there. People are buying 70, 80, 100 P multiple.
They're crazy
And,
valuations.
They are crazy valuation. Can I say, again, thumping the table, this is it and it is going to end tomorrow? No, I can't say that. But in a situation, let's say take for instance consumer companies.
Yeah.
When you have, inflation which is nearly zero and commodity prices falling, what is it which will propel this company to post 15, 20, 25% sales growth? And if you do not have that kind of a sales growth, or if you do not have that kind of a profit growth, how will you justify these multiples?
That's a great advice. Just because consumer companies are considered to be great franchisees and they're great companies.
But again, I'm not generalizing. I know there will be still a lot of good investment ideas even in consumer companies.
Yeah.
So it is not a generic advice, but you have to be very careful when you are buying a company which is like trading at extremely high valuation, especially in the situation like this, wherein
Deflation
where is it is going to hurt most? If supposing, let's emphasize the situation that world becomes more uglier than what it is today, which is possible. There are 10-20% possibilities of that is also there. So where will you lose maximum amount of money? You're going to lose maximum amount of money where there's a froth in valuation, because the valuation could get compressed.
So anything north of 50p you would avoid. Can I generalize it?
No, I would not say that.
Not
I'm not saying that, but anything which is above 50p or 40p, I would be extremely careful, analyze it properly, and first I have to answer myself, what is it which I'm building up in the price? Is the business still suggesting that it is a lull period, but can it grow 25-30% maybe after 6 months? Then it can still constitute part of our portfolio. But can it be a significant portion of portfolio? No.
If I understand your style of investment, and I've tracked your style of investment for nearly 15 years now, you said, I look at the size of opportunity, which is mega trend. I look at some degree of leadership or some degree of efficiency, and I look at valuations. So what are the mega trends? What are the big trends which are going to unleash now going forward?
There are many of them, Nikunj. I'm saying
Name a few.
I'm saying that just again, see, one mistake which we did in the last 20 years of my investing career. That,
It's been 20 years.
20 years, of course. So 20 years in the stock markets.
Okay.
So one mistake which I can honestly confess is that, we never could emphasize what can change in the next 10-20 years.
Okay.
And there are so many things which have changed in last 20 years. So we always overestimate what we can do in the short term, but we always underestimate what we can do in the long run. So what my point is that, if you are a true investor and if you are a true believer in India, this is the time to take that long call, buy some serious companies with significant stake. See, when you talk of, it's easy to talk about, let's say, Rakesh Jhunjhunwala or Radhakrishnan Damani, but if you look at their investing style, what have they done? They have bought companies and sat on it for 10 years, 15 years.
Yes.
That is when you see wealth creation. You don't see wealth creation by panicking. This is down by 3%, so it is going to go off, and this is up by 3%, so we are on. So I am saying there are many trends which are emerging. For instance, we discussed last time that the entire mining sector, for coal production going up from 600 million ton to a billion ton in a matter of 4 years. There's $20 billion of investment which will happen. There's a lot of wealth creation which will happen. Railways, there will be a lot of companies within railways. Consumer credit, we discussed about. Tourism, we again, they have open tourism for 180 countries now. There is visa on arrival. So these are, now, if I look back 20 years back, there was no pharma sector.
Yes.
There was no technology sector.
Oh, yes.
So there will be some new businesses, there will be some new sectors which will emerge. And when we talk about 5-10 years down the line, you will look back and say, wow, what an opportunity it was, and we missed it again.
Okay, so I will sound repetitive with this one. I know I've extended my appointment with you, but just to generalize our today's interaction, you are of the view that a retail investor should not panic. And if you've not participated in equity market now, please do so. Don't cancel your SIPs. India will revive and stock markets will withstand this global turmoil.
Even I could not have summarized this better than this. You are bang on. Absolutely. We are a medium to long-term bull in India, and we firmly believe that equity as an asset class is here to outperform the other asset classes, and because it is tax-free money and a lot of people who have missed the bus, these kind of events and these kind of corrections are a great opportunity to get in.
It is really reassuring to get that from you, especially from someone who's believed in the true value of creating wealth for individual investors.
Yes, absolutely.
Thank you for your time.
Thank you.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.